Everyone's looking at Bitcoin like it's the king of the crypto jungle. Everyone's betting on Ethereum to rebuild the next generation of the internet. And while the spotlight stays glued to meme coins, speculative pumps, and DeFi hype cycles, something far more calculated has been unfolding behind the scenes. You see, Bitcoin was never built for bankers. Ethereum, too open, too chaotic, too public. XRP, that war's already too noisy. But the real puppet masters, the central banks, the institutions, the intergovernmental agencies who actually move trillions behind closed doors, they've made their move. And it's XDC. Not because it's flashy, not because it's trendy, but because it's functional, because it's invisible enough to avoid public panic, and powerful enough to plug directly into the backbone of global trade. This isn't theory. This isn't crypto Twitter tinfoil. This is documented, integrated, and already in motion. XDC is embedded with R3 Corda, the enterprise blockchain favored by JP Morgan, HSBC, Goldman Sachs, and 300-plus financial giants worldwide. It's ISO 20022 compliant, meaning it's already compatible with the future of international payment messaging infrastructure. And it's deeply linked to the World Trade Organization, the International Chamber of Commerce, and quietly positioned to solve one of the biggest inefficiencies in global finance, the $5 trillion trade finance gap. This isn't a moonshot coin. It's a railway system, a financial protocol built to serve the old money's agenda in the digital age. XDC isn't the people's coin. It's the institution's coin. And that should scare you or interest you, because while everyone else was gambling on the next pump, the elites picked their winner. And they picked it quietly. Before you shrug this off, ask yourself, if you had the power to rebuild the world's financial plumbing, would you pick a coin that's volatile, noisy, and unpredictable? Or would you pick one that's already working inside the system, silently, efficiently, and compliantly? XDC is hiding in plain sight, not because it's weak, but because that's exactly how the elite want it. Keep watching, because by the time this coin hits the headlines, you'll already be too late. Let me show you what they've been building while we were all distracted. Trade finance, the quiet engine of global wealth. Everyone's focused on retail payments, DeFi apps, and NFTs. But they're missing the single biggest financial sector screaming for blockchain disruption. Trade finance. Now here's what they don't tell you in crypto Twitter threads. Trade finance isn't sexy. It doesn't trend. But it powers nearly 90% of all global trade. That's over $20 trillion in goods annually. And every year, a staggering $5 trillion worth of that trade is held back, because traditional systems can't keep up. Outdated paperwork, fragmented data systems, lack of real-time settlement, high risk of fraud, and most importantly, zero interoperability across borders. Now guess what problem the banking elite wants solved more than any other? Efficiency in trade. Because unlike retail speculation, global trade is their real money machine, and any blockchain that can streamline it becomes a golden key to trillions. This is where XDC quietly steps in. Not with hype, not with promises, but with working solutions. XDC was built specifically for trade finance, with smart contract capabilities, ultra-low gas fees, and near-instant settlement speeds. It's not trying to be everything. It's trying to be the digital engine for letters of credit, bills of lading, invoices, and cross-border document exchange. Real, tangible, high-value infrastructure. And that's why major consortiums, like the Trade Finance Distribution Initiative, TFD, have already adopted it. That's why platforms like TradeFinix, Aldar, and Impel are integrating it into real-world workflows. Because XDC isn't speculating on the future. It's already building it. And if you control the rails of international trade, you control the flow of global money. So ask yourself, why would the institutions bet on some layer 1 meme with high fees and slow confirmation, when XDC is already solving billion-dollar inefficiencies quietly in the background? It's not hype. It's infrastructure. And infrastructure is what banks invest in, not moonshots. R3 Corda, the institutional blockchain nobody talks about. When people hear the word blockchain, they picture wild decentralization, public networks where anyone can participate, nothing can be censored, and financial control is distributed. But let's be honest, that's not what banks want. Banks don't want chaos. They don't want radical transparency. And they definitely don't want to operate on the same networks as anonymous actors or meme coin gamblers. What they want is control, data privacy, compliance-ready infrastructure. They want blockchain but built their way, permissioned, regulated, scalable, quiet. That's why R3 Corda was created. And it's not some fly-by-night project fighting for relevance in the crypto space. R3 is a global financial software powerhouse, built from the ground up to serve the needs of regulated financial institutions. We're talking about names like JP Morgan Chase, HSBC, Bank of America, Barclays, Engie, Citi, Nasdaq, over 300 institutions all plugged into a single shared platform. And that platform is Corda. Unlike Ethereum or Solana, Corda doesn't compete for clout. It was never built to serve retail. It was built to solve one problem. How do you bring traditional finance into the blockchain age without triggering regulatory chaos or losing institutional control? The answer? Make the blockchain invisible to the average person and indispensable to the institutions. Corda does that. It lets banks run private, secure smart contracts. It allows for seamless, legally enforceable financial workflows between regulated parties. And it's already being used for interbank payments, bond issuance, insurance, syndicated loans, trade finance, and more. But there was one missing piece. How do you move real value across the Corda network, instantly and globally, without relying on slow, expensive traditional rails? That's where XDC steps in. When Corda needed a settlement layer, they didn't pick the usual suspects. Not Bitcoin, too slow, too volatile. Not Ethereum, too expensive, too congested. Not even XRP, too regulatory heavy and caught in lawsuits. They picked XDC. Quietly, strategically, permanently. Why? Because XDC checked every box the banks needed. Near zero fees, 2-second settlement finality, scalable and energy efficient, fully interoperable with Corda's smart contract environment, built-in KYC/AML integration tools for compliance. More importantly, XDC wasn't just compatible, it was embedded. It became the official settlement token for Corda's public blockchain bridge, turning it into the default value layer for regulated trade transactions. Let that sink in. A private, permissioned financial network used by over 300 top-tier banks is now directly linked to a public crypto token, and that token is XDC. This is not speculation. This is active infrastructure, and it's completely off the radar of most retail investors. Here's the bottom line. Corda is where the institutions live. XDC is the bridge that lets them move money safely and instantly, and no one outside the circle is talking about it. That's by design, because the elite don't build in public. They build quietly, strategically, and with intention. And they choose partners that don't draw attention, just results. So while everyone else is speculating on the next meme coin breakout, the banking elite are already using XDC to settle real-world financial contracts. They don't need hype. They need trust. And XDC has earned it, silently behind closed doors. That's not a crypto moonshot. That's a structural shift. And in this new financial order, Corda handles the legal layer. XDC handles the liquidity. You're watching a parallel financial system come online, and most of the world has no idea. ISO 20022, the compliance layer no one's watching. In crypto, everyone's obsessed with speed, scalability, and decentralization. But the real world of finance, it runs on compliance, messaging standards, and interoperability. And the biggest shift in that space, one that's already reshaping the backbone of global finance, is something most people in crypto haven't even heard of: ISO 20022. Now let's break this down, because this is not just a buzzword. This is the global language of money. ISO 20022 is the new international messaging standard being adopted by every major central bank, payment system, and financial institution worldwide. It's not optional. It's not a trend. It's a mandate, a forced evolution of how money moves across borders, institutions, and systems. SWIFT is migrating. The European Central Bank? Already moved. The Federal Reserve? Implementing it. Even China's cross-border interbank payment system, CIPS, is adopting it. And once ISO 20022 becomes the global norm, any asset, digital or not, that isn't compatible will be left behind. Think of ISO 20022 as the Rosetta Stone for global finance. If your blockchain asset can't speak that language, you're locked out of institutional money flows. So here's the billion-dollar question. Which crypto assets are ISO 20022 compliant? Not many, and even fewer are already functionally integrated into the existing banking infrastructure. But one of them is, and it's not Bitcoin, Ethereum, or even XRP. It's XDC. XDC is not just compliant with ISO 20022. It's built to operate within it from day one. That means when financial institutions transition their messaging systems to ISO 20022, XDC doesn't need retrofitting. It doesn't need an upgrade. It doesn't need years of regulatory battles or experimental testing. It's already compatible. That alone puts it in an entirely different league. Because in a world where compliance is king, speed and decentralization mean nothing if you can't play by the rules. ISO 20022 isn't some future maybe. It's happening now. And here's the kicker. Most retail investors don't care about messaging standards. They're not tracking what SWIFT is doing or what central banks are enforcing. They're chasing volatility, not infrastructure. But the institutions? They care about one thing: seamless integration into the systems they already trust. And that's what ISO 20022 offers. A single, unified language that allows banks to talk to blockchains, central banks to communicate with digital assets, cross-border settlements to move instantly, accurately, and legally. XDC sits at the intersection of that communication layer. It's already wired into the protocol that the next era of money will be written in. Not many tokens can say that. Not many were designed for it. XDC was. So while everyone's watching market caps and meme coins, the elite are watching ISO 20022 compliance charts. And XDC is quietly ticking every box. Here's the harsh truth. If your favorite coin can't integrate with ISO 20022, it won't survive in the regulated global finance system. If it's not compatible with the new messaging rails, it won't be accepted by banks, clearinghouses, or international payment networks. And if it's not already being tested in sandbox environments today, it's already behind. But XDC is not only compliant, it's already functioning inside that ecosystem. It's not a future bet. It's a current position. It's not preparing for the system. It's already inside it. And the longer retail ignores ISO 20022, the more they miss what the institutional world is actually paying attention to. Ties to the World Trade Organization and the $5 trillion they want to digitize. Most people in crypto don't even know what trade finance is, let alone how it works. But institutions, governments, global financial policymakers, they're obsessed with it. Because while the headlines are about inflation, interest rates, and consumer debt, the real bottleneck to global economic growth sits in trade finance. Here's what they're not telling you. Every year, over $5 trillion in potential global trade doesn't happen. Not because there's no demand, not because there's no supply, but because there isn't enough access to credit, settlement, and documentation infrastructure for importers and exporters, especially in emerging markets. That's $5 trillion in value locked behind paperwork, legacy systems, and institutional friction. And it's a crisis the World Trade Organization, WTO, and International Chamber of Commerce, ICC, have publicly called out. They've spent years searching for solutions, not just policy but technology. And this is where XDC comes in. Because while everyone else in crypto is trying to launch the next social coin or DeFi casino, XDC is solving real-world pain points, the kind of problems that only matter to serious global players. XDC is directly aligned with the Trade Finance Distribution Initiative, TFD, a network backed by the ICC, WTO, and leading financial institutions, whose goal is to digitize and distribute trade finance assets on-chain. It's also partnered with TradeFinex, a blockchain-based platform designed to bring small and medium-sized businesses into the global trade ecosystem. Using tokenized invoices, smart contracts, and instant cross-border settlements powered by XDC. And what's the mission? To turn that $5 trillion shortfall into liquidity. To make trade financing accessible, programmable, and borderless. And to do it in a way that plugs into the banking system, not fights it. This isn't about making headlines. It's about building a back-end. While crypto influencers chase whatever's trending, XDC is being woven into the very systems that facilitate global commerce. And who benefits? The World Trade Organization, because it fulfills their agenda to digitize global trade. The banks, because they can issue, manage, and settle trade finance products with less friction. Governments, because it reduces fraud, speeds up documentation, and increases GDP. And XDC is right in the middle of it, quietly running the pipes. It's not trying to flip Bitcoin. It's not trying to replace SWIFT. It's becoming the infrastructure that moves real money between real players across real borders. And here's the wildest part. Almost no one in retail knows this is happening. It's not on crypto Twitter. It's not pumping 200% in a week. It's just working. Silently. Globally. Institutionally. The elites don't need a coin that goes viral. They need a coin that solves systemic problems. One they can integrate into banking systems, trade finance platforms, and regulatory frameworks without starting a fire. And XDC fits that description perfectly. Because in the world of global trade, compliance matters more than clout. Efficiency beats decentralization. And solving a $5 trillion bottleneck? That's a power play. So while the world is watching charts, the banking elite are watching infrastructure. And what they see in XDC is not just a crypto project. It's a tool. A highly specialized, low-noise, high-impact tool that solves problems they actually care about. That's not hype. That's power hidden in plain sight. While the world's eyes are glued to the noise, meme coins, hype cycles, and the next big pump, a silent evolution is taking place. XDC isn't trending on social media for a reason. It was never meant to be part of the public hype machine. It was built for the institutions, for governments, for trade giants, for those who move silently but shift global markets. This isn't investment advice, it's a wake-up call. If you're still waiting for a loud signal, you're already behind. Because the biggest plays in crypto don't make headlines. They make history. If this opened your eyes, now open others. Like, comment, share, and make sure you subscribe because the deeper we go, the clearer the picture becomes.